welcome the management of InfoEdge to discuss just that. Chintan Thakkar, the whole-time director and CFO at InfoEdge, joins us on the show right now. Hi Chintan, good to be speaking with you. There's a bit of an improvement that we're witnessing in the number, especially as far as the Naukri is concerned, almost 6% growth on a YY basis, and the billings jumped by almost 9%. Talk to me about what was the volume growth like, what was the realization growth, and going forward, what's the expectation with respect to the Naukri billings?
Yeah. So if you look at the billing, which is a lead indicator, and if you also look at what happened in Q4, it looks like that we have kind of we are at the bottom of the U curve, and probably we have started growing up. So it's quite likely that we are bottomed out, although we are still waiting for the higher recovery. But there is some amount of recovery that we are seeing it, and there is an increase both in volume as well as realization. That's also a kind of an encouraging news. Non-IT segment has been kind of doing much better than what the IT segment seems to be doing. But also the other good news is that the consultant also have now started showing some amount of recovery, which wasn't the case in the last quarter. So there are a lot of encouraging signs, which kind of makes us believe that maybe I think this is when we have bottomed out, and maybe we should start showing a better recovery going forward.
Chintan, hi, afternoon. Curious to know what's happening with 99 acres, because a clear disconnect from the industry that it represents and what's happening thereof. Muted growth clearly continues. I mean, when is it that we can expect a turnaround, and a material one at that?
Yeah, I think you need to just not look at what the top line growth is, which I think if you look at last year, all the 4 quarters were kind of a high growth. This quarter is little subdued, but it's also far more profitable growth. So it's far more efficient growth. So if you look at the overall cash burn, that has significantly come down. And that's not only for 99 acres, that's true for some of the other non-recruitment businesses as well, that we are sticking to the theme of growing more efficiently, more profitably. And that's what this quarter seems to be showing.
Profitable growth, that's been something that you guys have been tracking. But what about Jeevan Sathi? It's nearing break-even. Should we expect it as soon as next quarter, perhaps?
Yeah, well, fingers crossed. Again, as I said, that look, we are growing and we want to grow efficiently. So that business also shows that yes, we are closer to the break-even. Overall, all the non-recruitment business taken together, the cash burn has come down almost like 73% from 61 crore to about 17 crore. So that has been one of the highlights of our quarterly results.
And what about the A&P spends? Because that seems to be weighing on your margins. Is there any plan to ease that out, or do you think that spend quota will continue as is in the future as well?
Well, I think A&P spend again in non-recruitment businesses have overall come down. Again because of Jeevan Sathi's A&P spends have come down. In Q1, in recruitment business, in Naukri business, we had some of the advertisement that happened during the IPL times, and I think that has kind of resulted in slight higher kind of A&P cost in the overall bucket.
Taken on that, but just coming back to the recruitment business a bit, what led the growth this time around? Because segments like healthcare, hospitality, etc. were picking up. Is that the vertical that continues to do well? And what about IT? Is there any growth that we should perhaps expect from Q2 onwards?
Yeah. So in general, as I said, that non-IT has been doing much better, right? Consultant growth has just begun. IT was, I would say that it was around, let's say, mid-single digit type of growth. Non-IT was kind of growing at a mid-teen type of growth. So IT is has started now growing. Last year also we have shown some growth. This quarter also there's some growth. So there are some encouraging signs over there, but it isn't like what it used to be. So we are hoping that the recovery would be much stronger in the coming quarters.
Good to have you on the show. Thank you so much for taking the time out and joining in.
Thank you so much. It's my pleasure.
If you like this video, then like, share and subscribe to ET Now.